Sterling, you've just been in China. How concerned are you and how concerned are the Chinese investors about that spike and lurch that we've seen in the Chinese equity markets in the last quarter?
Andrew, I'm not concerned at all. And I've been very surprised at the commentary, not by, of course, people in general community, but by people who should know better about what is happening in China.
Because am I right in thinking that these Chinese bourses, which are, they're well ahead of where they were, what's fair to say they're about where they were really 3 months ago?
Absolutely.
At a time when the Australian market's actually headed south.
Absolutely. So if you go back to the 1st of April, which is about a quarter ago, again, we're keeping these references nice and general.
Yeah.
The CSI 300, which is the main index in China, is about 1 or 2% ahead of where it was exactly, or about flat from a month.
And year on year, about
up 81%.
I've read
81%, which is a significant number.
Yeah.
The ASX 200 is down about 5 or so percent. Again, keeping a general reference, but the comparison is China, even with the turmoil, is still ahead, and Australia is not going ahead at all.
Yeah. So really, you feel that a lot of the commentary has been saying, you know, where is China, and you're saying, well, not at all. Are you a bit concerned, however, that the Chinese authorities have been so active in trying to put the brakes on?
Yes and no. Just very quickly explain. What we talked about in the paper is I made a quite strong call that China has the potential, their stock market, their listed investment market, of quadrupling or tripling by 2020, which is a significant call. But the backbone of that thesis was that the Chinese government directed domestic internal investment from real estate markets through shadow banking. They've opened a new gate towards capital markets.
Yeah.
So to answer your question, I think it's actually a very good sign that they've stepped in the way that they have, that they needed to. Of course, that's not a good thing in the short term, but from a long to medium term investment point of view, they've shown that they will do what it takes to support that market.
But in a way, you're actually saying that it's the Chinese government that pushed people towards the equity markets.
Yes.
And you're also making the point that most of them, as long as they didn't buy at the top and sell in the last couple of weeks, most people are actually ahead. So
Absolutely.
it's just part of the great learning process as China adapts to full-scale tooth and claw capitalism.
Yes and no. I mean, from the animal spirits point of view, absolutely. But the way that they're going about structure markets is different than how we do here in the West. And they've never tried to profess to be anything but what they are, which is a state-led authoritarian government, supporting their economy and growing 1 in 5 humans on the planet in 30 years to an economy uncomparable to anyone else in the last 2 centuries.
So how do you see it playing out in the next few weeks? We've seen the market come off and then bounce for a number of days.
Well, to answer both questions and the previous one you asked, one of the concerns I have is by the government stepping in, they've done a lot of very, very good supportive parts of the market. Whether that's good from a liberal free market point of view is a different conversation. One of the things they've done is they've suspended futures contracts rolling forward. And that has an implication because unlike equities or a different type of asset allocations, if you stop the ability of futures to be rolled, then they expire worthless. Now that is a potential real issue that the Chinese haven't thought ahead about.
Yeah.
But I'm sure they'll fix it in the next 2 weeks. So it hasn't been done perfectly, of course not.
Yeah.
And of course the experience the last few weeks has been pretty rough. But there's still, it shows a very strong sign that they'll do whatever it takes to support that market. And that surely is a good thing.
Meantime, you're making the overall point that this is a setback in a market that nevertheless is going to move ahead in a very significant way between now and 2020.
Yes, but again, we're up 75, 80% in less than a calendar year. I mean, that's a pretty successful failure. Again, it depends what game you're in, but our business is advising people to invest for the medium to long term. And from that point of view, I can't see how this has been a bad story.
And have you been basically recommending that people should be buying roundabout now, without giving too much away?
No, well, again, I can't give advice in the public forum in this way, but what I can say is I'm still supporting the thesis that there is a very strong case that the Chinese will support their market. They want a strong market architecture by 2020. Yes, we've experienced some bumps in the last few weeks, but they've also demonstrated they'll do whatever it takes, and this story is just beginning. It's not ending.
Sterling, thank you very much.
Thank you, Andrew.